Alright, so today I just wanted to quickly go over today's fundamental news announcements that came out to do with retail sales, PPI also, but more specifically retail sales. Today is June 15th. So, um, when I was looking at these forecasted numbers in the morning before the actual numbers came out, I was trying to do some analysis to see what I thought about the forecast, how I thought it could affect the pairs I trade, which is gold, and just help me really get my form my own opinion on the news that would be coming out. So what I noticed was retail sales was expecting very bad numbers, very bad numbers. That was last month's. This was the expected this month. But core retail sales were actually very good, more than double better than the expected retail sales. So I was saying, how could that be? How could this be so negative when the US is opening up? So people are finally starting to shop again. Past couple of months it's been opening up, so they've been shopping. Sales have been going up, I'm sure. Stores have been packed. People have been happy to be getting out and shopping after the pandemic. So I was wondering, how could this be negative? Then I'm saying, well, why is this one positive? What makes this so much better than this? So I look, what is core retail sales? Core retail sales essentially just excludes automobiles, so cars and vehicles. It excludes the sales of automobiles, whereas retail sales is everything, including automobiles. Now, you'll see a lot of news announcements. They'll have the regular one, and then they'll have core, and core just subtracts any volatile factor in these news announcements that could sway the number into one direction or the other that may give a false message of what's going on. So what they'll do is they'll take these volatile factors out to give a more accurate example. So let's just make it simple. Say you have a basket of, similar to CPI, let's just say you have a basket of food. You have fruits, vegetables, and meat. And this given economic event is specifically tracking the change in prices of this basket as a whole. But let's say meat is a very volatile product and sometimes will very very violently jump in one direction or the other, even if the other ones are stable. So let's say the fruits and vegetables 1 month are actually haven't changed much. They maybe gone on up a little bit, but meat plummeted. The number that's going to come out is going to be crazy negative just because of meat, even though all the other things in the basket, let's say there's more than fruits and vegetables, even though all the other things in the basket are actually somewhat positive. So that's why they'll release a core version without this volatile thing. In this example, it's meat, and then I'll give a more accurate representation of the entire basket rather than just one of the things swaying it in one direction or the other. So that's what's going on here. So I'm thinking, why are automobile sales pulling retail sales down so much? Well, that's simple. That means they're expecting automobile sales to be down significantly. So if we think about why could that be? Why do I agree with this statement? Because I'm trying to form my own opinions about this, so I can understand everything going on more. So the conclusion I came to was simple. We're coming out of COVID now. And just look around you. Everyone's starting to work from home now. It's becoming the new norm. Office spaces are being closed down. Pretty much anyone who can work from home will be working from home for a while, if not permanently. With that being so, people don't feel the need to buy cars anymore. If they're looking at buying a new car, maybe they're going to hold off because they don't need it anymore. So let's say it's a husband and a wife, one car may be fine, or maybe the old car they're thinking about replacing is fine if they're not using it much anymore. So that is going to bring prices down, or sales down. People won't be buying as much, and it'll bring it down significantly because it's most of the country that is going to be working from home now. The other thing to think about is the microchip shortage. I don't know the exact details of it, but I've read a lot of articles vaguely about how there's a microchip shortage, which is creating a massive obstacle for vehicle producers, which is really putting a dent in the production speed. And of course, when there's low production, then there'll be lower sales, which also is pulling down automobile sales greatly. And that's what it was. And it totally makes sense as to why these numbers were so different then. Retail sales, when it has cars, for the reasons we just explained, is really pulling it down. Take cars out of the equation, and it's actually looking good because people are shopping again. Now, what actually ended up happening with the numbers is they both came out negative. Now, we were right. With automobiles, it was quite a bit more negative still. Although this fell really short still. So now why? Why did this fall short? I thought people were shopping. Now, people are likely shopping, yes. But compared to the last couple months, here's negative, but it's less than 1%. So it basically tells nothing changed from the month before, and the month before was 8.4%. That's a huge number. If you look at just all the green in general, we have an 8.4% here, we have a 9%, we have 5.9%. All of these numbers are telling us that the past couple months, sales have been skyrocketing. So again, we ask why were sales skyrocketing so much. That's because of the stimulus checks. Stimulus checks were rolling out. People were spending the money. People were pumping the economy with this money. They were going on shopping sprees. So that was artificially, well, not artificially, but temporarily making retail sales skyrocket. Now, once those stimulus checks stopped going out, once those stimulus checks were all used up and spent, then the retail sales started to level out more to a more realistic level where people aren't getting stimulus checks. And that results in lower numbers than expected because no more stimulus checks to go out and spend. So we're not able to reach these high numbers that we were when the stimulus checks were going out. So that's why these would have fallen short. And that would have been something to consider that I didn't consider when thinking about the forecast. Anyways, I thought that was very interesting. I thought I would share with everybody. I learned a lot by really taking the time to think about that. It ended up playing out. It would have played out in my favor if I listened to my trade, or if I listened to myself. Because if I'm expecting mixed news, then that's telling me there's probably not going to be a big move during the news announcement. But for some reason, I decided to ignore myself, and I still took a trade, and it bit me in the ass. But nonetheless, I learned a lot from this. Wanted to share with everybody, and this goes to show how not only useful really analyzing these fundamental events are, but just how interesting they are. So when you see these big news events coming, really look at the forecasts, really look at the past. Develop your own opinion. Don't just say, oh, Forex Factory says it's positive, so it's going to be positive. Try to develop your own opinion as to why. And after the numbers come out, think about, okay, it was negative. Why was it negative? It was positive. Why was it positive? Really try to think about that, and you're really going to learn a lot. And you're going to be able to analyze it for yourself in the future. Anyways, that's it for today, guys. I really hope that you'll find some benefit in this, and I'll see you in the next one.